Okay, I see we have quite a few people who are connected, which is great. So maybe we can at least get started with the intro. So it's my pleasure to welcome everyone to this blue bag on increasing opportunities for water and sanitation SMEs to access financing in India. This is work that was launched earlier this year. It was an initiative of ADB's Sustainable and Climate Change Department and ADB's Private Sector Operations Department. And we worked with Dalberg Advisors to undertake this scoping study. And so you'll be hearing about its findings and the opportunities for us to support SMEs in this space during today's session. So just to quickly introduce myself, my name is Alison Woodruff. I'm a Principal Water Security Specialist in ADB's Sustainable Development and Climate Change Department, and I'll be co-moderating the session with my colleague Christian Walder, who will be giving the closing remarks. I'm really happy to introduce our great lineup of speakers for today's session. So we'll be starting with Pamela Bracey, who's a Principal Investment Specialist with ADB's Private Sector Operations Department. And then the session will follow with the presentation from Dalberg Advisors. And from Dalberg today, we have Harshita Rathi, who was the project manager for this assignment. And we also have Kunal Walia and Nirat Bhatnagar, who are partners in at Dalberg and who have extensive experience in the WASH financing space. So with that, maybe we can get started. I will hand over to Pam just to set the context and give some opening remarks to set the scene for today's presentation. So over to you, Pam. Thank you.
Thank you very much. Can you hear me?
Yes, I can. Thank you.
Wonderful. Apologies, I'm not going to go on camera. There's something wrong with my computer, so I'm calling in from my phone. But glad you can hear me. But also thank you everyone for joining in. I guess I'll put everything into context, and then I'll have a couple more remarks about what we've been doing with Dalberg. Despite advances in the water sector in the Asia-Pacific region over the past 2 decades, almost 500 million people in the region still do not have access to at least basic water supplies, and 1.14 billion lack access to basic sanitation. The economic and social case for investing in water security throughout the region is well established. However, water investments come at a distinctly high cost to keep pace with certain movements such as rapid urbanization and economic development, a changing climate, related health, economic, social, and environmental crises, as well as inequality. Such costs can be minimized and covered through mechanisms enabling investment in the future to deliver long-term benefits. Financing water security in Asia is actually not solely about money, but it's also about the effective and efficient use of available water resources and assets, as well as ensuring that ongoing expenditures deliver substantial benefits for communities, the economy, and the environment. Strengthening national water security is a must for improving the quality of life of all people throughout the region. Recovering from the setbacks that have been caused by not only COVID-19, but also other events that are external shocks that have happened to the market more recently, as well as adapting to climate change, require that all countries put water security at the top of their agendas, because water security enables not only economic growth, but also provides the conditions for a healthy and a prosperous population. And it was from this context that ADB, specifically PSOD, I guess it's been several years ago, had engaged Dalberg to look specifically at the water and sanitation situation in India, And it was through, certain market demand mappings and understanding the supply chains that we kind of got to a point that we realized in terms of our providing knowledge to the market through webinars, through conferences, through a microsite, that despite the effort to spread the information to financial institutions and others, that the private sector activity in water and sanitation still, there was still opportunity there. And so it was with this in mind that we started working with SDCC's water team. And together we again re-engaged Dalberg to assess market opportunities and constraints again in India, to look at MSMEs in the wash sector and look at the difficulties or the opportunities they had for accessing commercial financing. And again, MSMEs play a significant role in providing that last mile connectivity and can play a significant role in helping to close water security, water supply and sanitation service gaps. And it's with this that we that Dalberg undertook the study and have been able to give several recommendations in terms of what ADB, not only private sector, but also our sovereign sector, can help do to expand financing to MSMEs in the wash sector. And it is with that I'd like to turn it back over, and also to thank everybody again for your time today. Thank you.
Great. Thanks so much, Pam, for setting the scene for us. So now I would like to invite the Dalberg team, Harshita, Kunal, and Nirat, to give their presentation. Thank you.
Thank you, Alison, and thank you, Pam, for setting the stage. And hello, everyone. Really excited to present some of our key findings from the study. I'm Nirat. I'm a partner at Dalberg, and along with my colleagues Kunal and Harshita, led the study that we conducted with ADB. I just want to spend about a minute walking everyone through why we were really excited to partner with ADB on the study and the context of financing WASH the way we saw it. So Dalberg over the years has been doing a lot of work in WASH and also in WASH financing. And what we believe is we are at a very interesting time in India and South Asia when it comes to both WASH business models and the way they've been evolving, and also the way the need for financing has been evolving. There's a huge amount of proliferation of business models. So earlier, if you were to rewind the clock about 15, 20 years ago, WASH was really a binary, right? There were these large players in WASH which operated at the city level or even above the city level, and there were these sort of small, tiny kind of operations, largely NGO driven or very informal sector driven, who would construct toilets or construct water points. But over the last 2 decades, there's been so much innovation in the different kinds of operating models and business models that have emerged both in the water and the sanitation value chain, the waste value chain, the toilet value chain. So that I think is really exciting, but also quite challenging, because some of these business models are complex. The economics don't always add up. Water and sanitation continue to be a public good in many, many parts. So the question is, how does one think about scaling these business models when their economics don't always add up? There's a need for blended finance, right? So in response to this evolution of business models, what we've also seen is the investment space and the investor landscape in WASH has evolved quite significantly. Earlier, there were just 2 or 3 different types of investors. Obviously, ADB has been a very large player in WASH in India for many, many years, decades. The government was a big investor. But now, over the last 10 years or so, even 5 years, there's been so much I would say, heterogeneity in the kinds of investors who are looking at water sanitation, all the way from, let's say, CSR funds to impact investors, even VCs who are looking at maybe a tech-enabled place. And we're at that stage where all of these things are happening, but we need a lot of coordination to maximize scale up, right? We need such actors to work together to see the elephant the same way, to sort of figure out the puzzle together. So we were really excited to work with ADB in putting together this almost this landscape of the wash sector, the way we saw it, the different business models, the different kinds of entities who needed investment on the one side, and then the different kinds of investors and what they were investing, what they could invest, what kind of activity would be needed in terms of financial instruments, in terms of de-risking to make some of this happen and to lead to a better equilibrium. So we have little time, but we're hoping over the next 15-20 minutes to walk you through some of the big insights in this space. Both Kunal and Harshita will sort of walk you through key aspects of what we found. And we'd be happy to answer any questions you might have towards the end. So without any more delay, let me turn it over to Harshita for the next segment.
Thanks so much, Neeraj, for setting us up. What we'll do over the next 15, 20 odd minutes is first spend a little bit of time understanding that landscape that Neeraj just beautifully started articulating. What are really the evolutions of these business models, but also what are the challenges? What is really stopping the money from coming in right now? And then spend some time actually thinking through what are the solutions, what are really the opportunities out there that we can start thinking about. We've of course thought a little bit about what's the role ADB can play, and we'll spend some time there. Spend a lot of time on what the challenges are. Water and sanitation are far from being solved in most places in the developing world, but of course also in India. There's problems across the value chain. But one of the key things that we did in the study is really looked at what are the private player operators and how can you really think about them in different segments. And in the water value chain, you see that there are 11 different types of players. And besides sort of the more centralized players, the more traditional ones that set up these large central players that Neeraj was talking about, there's a lot of decentralized players. You have people who lay down the last mile pipe connections, people who help transport and support household community level purifications. But more innovatively, we've seen a lot of players come up in monitoring water usage, having a lot of decentralized distribution kiosks, etc. But there are 11 such operators. We'll go into a little bit of detail on how to think about these operators into more neat categories as we go through the presentation. That's on water. In sanitation, similarly, if you look across the value chain, there are 10 such operators. On the centralized side, there are, of course, enterprises who help lay down pipes, set up and operate the large centralized sewage treatment plants. On the decentralized on-site sanitation side, there are enterprises who help make toilet paths, set them up, repair them, followed by players who help collect, transport fecal waste, set up and run fecal sludge treatment plants. But again, on the more innovative side, we're seeing emergence of some really innovative solutions like setup of bio-toilets, biodigesters, use of technology to clean fecal waste, etc., etc. But what's really stopping a lot of innovation from happening today is the access to finance. We ran some numbers through the course of the study, and some higher level estimates suggest that less than 16% of the demand is being met by formal finance today. And we'll cover the reasons behind what's happening to restrict this today. Investment attractiveness for all of these different players is not uniform. So to really understand the market, we segmented them in all of these players into 5 archetypes. We looked at 6 different factors, looked at concentration of players, how concentrated are the players or how fragmented they are, how concentrated is their client base, specifically how concentrated is their government client base, which is a very important factor when you think about the wash sector. What's the untapped growth potential? A lot of these business models are still evolving. We're still understanding what their economics will come out to be. What's the predictability of their revenue models, which is very important as financiers begin to understand what their cash flows will look like. what is the formalization today, but what it's likely to be tomorrow. Using some of these factors, we segmented the wash market into 5 archetypes that you're seeing on your screen right now. I'll walk you through a few of them to give you a flavor of really what does this mean in terms of their financing needs. The big message to take away from the presentation today is wash is a really complex space. These different models really require fairly different financing needs. And that is what a lot of the philanthropic capital, a lot of the blended capital can really do today. On the left-hand side, you'll see something called the large ticket enterprises. These are typically large formal enterprises, your L&T, your really large sewage treatment plant players, for example. This is a $1-2 billion opportunity. They typically need long-term debt, fairly large ticket sizes, but are probably also the segment right now that is tapped by the banks right now, are likely to be secured loans already, and hence, are already a prime target for the banks. But as you go further down to the right, they are less and less targeted by the financiers today. The middle section is where we think it gets really interesting. So, for example, if you look at the mature operators and emerging innovators, what we've called them, they're typically your small, medium enterprises. They have some complexity to their business. They're growing. In some cases, their business models are being tested. Their viability is being, explored. Together, they can be a good $3 billion opportunity to give you to just get a semblance of what these might be. These might be your larger collection and transport players, the guys who have trucks, the guys who make toilet parts. These guys will typically need low-cost debt, supply chain financing to fund working capital needs, perhaps at rates that are a little bit more subsidized. Hopefully, this is starting to give you a sense of how, because of the variance in the business models of the different wash enterprises, how can the financing needs really vary? But what's happening today? Like Pamela and Neeraj started alluding earlier in the presentation, different types of financiers are really starting to have always existed, but are starting to show in the wash space today. But there's a bunch of problems, and there's not enough focus on that missing middle layer, which is the MSME layer. Banks have been, age-old, been focused on that large ticket lending. There's been a lot of focus in India on household lending. But when it comes to funding the MSMEs, only the large ticket sizes get funded. The unsecured loans are really missed out on. Impact investors are really focused on high growth, tech-oriented MSMEs. What funds don't end up having a dedicated wash focus. Multilaterals, DFIs, have been giving loans, allocating capital to financial institutions. But beyond household lending, a lot of times the wash focus can be missing. Concessional facilities have been coming up, but uptake of these facilities has been low. You can see here again some math to really just land the message that in general, the wash focus for a lot of financiers has been low, and that's something that we're hoping is going to change in the coming years. But why is this happening? We'll spend maybe a couple of minutes on this slide. And to us, it really boils down to 3 big reasons. The first one is an unfavorable risk-return ratio. And that's because of 2 reasons. The first one is the perceived risk of entering wash is high. There's not a lot of, because of the numbers that we just saw, there's not a lot of experience that too many banks, too many investors have with lending to, let's say, MSMEs and wash. Wash is very much still perceived as a public good. A lot of wash services are still, given to governments. So the perception of delayed payments, no payments, etc., is too high. The transaction costs are really high. There's not a lot of discoverability of these enterprises. The enterprises are too dispersed. The cost to serve them can be really high. The second one is the actual capacity of financiers to serve these enterprises can be low. There's not a lot of understanding in the market today among the financiers to know which segments are attractive, what are really the differentiated product needs of wash enterprises. Is the tenure need high? Is the interest need different, etc., etc. There's not a lot of blending of capital. At the end of the day, there is right now in the market a need for equity and debt and maybe some amount of philanthropic capital to come together. Not a lot of this is happening, and there is a need for it to happen. And finally, there is also a constraint just around what's the pipeline that's available today. Both because of some external factors that are hard to control for. For example, it is true that there are some inherent problems with how some MSMEs function today, either in terms of how formalized they are, how digitized they are, or how much they serve the government and challenges that come. But not all is lost. And with that, I will pass it on to Kunal to speak to the solution side of this.
Thanks so much, Harshita. So before I jump into the opportunities that we eventually recommended for ADB, just as additional context, while we were looking to provide a quick landscape on private sector financing within WASH, the idea was also to be able to identify 3 or 4 pilots that ADB can potentially take forward in possibly 2023. So the work was really not to just look at what others are doing and what type of opportunities exist, but to look at what ADB's capabilities were and what ADB's priorities were, and then to say that okay, there are these 3 or 4 types of pilots that you could potentially explore. So to get to the opportunities or these pilots, we looked at a few things. We looked at the role that ADB can play in terms of the capabilities that it has. And from there, we identified different types of opportunity areas that ADB might have with financial institutions and with different types of SME segments that Harshita talked about. And from there, we went into what are the kinds of instruments that potentially ADB can launch. And if you go back to the previous slide, the first thing that we looked at was the role of ADB. Now, so there are 3 or 4 different types of things that ADB can do. Number one, ADB can provide financing or on-lending support to financial institutions directly, which will then fund WASH enterprises or households directly, or large banks work with smaller intermediaries, smaller MFIs, to provide to sort of get into co-lending arrangements. So that could be something that ADB could enable. Number 2 is traditionally what ADB has been doing is the financing of large PPP or large-scale infrastructure projects. Number 3, ADB can also potentially look at providing technical assistance to financiers, which is a huge need, like Harshita has mentioned. And there is potentially a role that ADB can play in terms of more market building advocacy type of work that it can do with the government or cities or utilities. So this is the landscape of what all ADB can do. From there, if we go to the next slide, we identified six opportunities areas. Now, this slide is a bit complex, so I'm not going to spend time on it, but just to say that we looked at different types of financiers, which are the sort of rows over here on the left-hand side. And we looked at different types or different segments of SMEs or enterprises to be able to map where ADB can actually play a role. Where are some of the opportunities for ADB to be catalytic? And from there, we identified 6 opportunities in the next slide and prioritized 3 out of those. Now, when we were going through this exercise of prioritizing these opportunities, we were working very closely with the ADB team, the WASH team, and the private PSOD team. And the priority that ADB had was to be more catalytic and do more than what they have done. So far, ADB has done a lot of work in sovereign lending as well as in providing financing to large ticket infra projects. But there is this missing middle that ADB wants to enable. And so based on that, we identified 3 priorities. Number 1, increasing MSME lending through banks, NBFCs, and MFIs. beyond the creamy layer to the missing middle of wash enterprises. Number two was to actually work or provide support to impact investors in wash, and potentially also help them identify city level opportunities. Now, impact investors have shown a lot of intention to participate in the wash SME landscape, but they've not been able to invest too much because of the challenges, and ADB can potentially play a role over there. And ADB can also try and increase the DFI participation for downstream lending. Typically, again, like ADB, other DFIs and multilaterals struggle to move beyond large ticket infrastructure. So these were the three things that were opportunities that were prioritized. And from these opportunities, we wanted to go into what kind of instruments ADB should look at. And if we move to the next slide, these are all the kinds of instruments that exist right now in WASH and in similar financing models. And we looked at about 13 different types of financial as well as non-financial instruments. Risk reduction instruments such as guarantee facilities, there were cost reduction facilities, instruments that we looked at such as earmarked funds, and a number of direct liquidity support instruments that could be blended in different ways. But very importantly, we looked at non-financial instruments that ADB can also introduce or partner with somebody to provide, such as investor TA, market building initiatives, as well as advocacy. And from this landscape of instruments, if you move to the next slide, what we did was we mapped which instrument was more relevant to different types of challenges that banks, financial institutions, impact investors were facing. So we've already heard from Ashita that there are different types of challenges that they were facing, but instruments can play a different role. They can either reduce cost or they can reduce the perceived risk or provide more liquidity. And based on that, we did a mapping exercise of what challenges would these instruments actually unlock, leading us to the fact that there are lots of combinations of instruments that ADB should look at. Now, this is where we landed in terms of different types of instruments that would be relevant for the three categories of opportunities that we identified for ADB. So to enable banks to lend to the middle layer of SMEs, which is opportunity number A, guarantee facilities would really be helpful because SMEs are not able to provide collateral. So this gives a risk reduction opportunity for banks. Concessional loans increases liquidity and reduces cost of capital, which reduces the transaction cost for banks, and potentially also look at project grants in different types of SMEs that have models that are not yet fully developed. So these were the three financial institutions, financial instruments that would be applicable for bank SME lending. When we looked at B and C, which were more around enabling DFIs as well as equity into MSME investments, there were different types of instruments that were relevant. Pool funding or the need for blended finance was identified as one. There is a role of reward and incentives to increase the rate of return within WASH. There are some accelerators that already exist in WASH, but their scale is limited, so ADB can potentially play a role in helping them scale. And potentially also look at innovative instruments such as impact bonds, which have done really well in India and other sectors like education and skilling. And there could be opportunities to demonstrate the impact through impact bonds for WASH SMEs that are at an early stage but have innovative solutions. All of this clubbed with different types of TA opportunities for ADB was what we finally looked at in terms of the opportunities, and finally prioritized. If we go to the next slide, 21 actually. Yeah. We developed a combination of 5 intervention packages. Now think of these 5 packages as potential pilots that ADB can run. And through a lot of discussions with external stakeholders, financiers, partners, as well as the ADB team, we prioritized a few of these. So the first intervention package that we recommended was a risk and cost reduction facility along with technical assistance. This could be a guarantee facility coupled with concessional loans, as well as output-based grants. The second one was broader, which was a blended finance facility, which could have a mix of pooled funds, including more commercial capital, but also grants at the other spectrum and everything in between, accelerators, as well as potentially impact bonds. So there are examples of such blended finance facilities with different instruments in India in similar sectors as well. And we also looked at, in terms of cross-cutting initiatives, which were more around technical assistance, potentially creating a WASH intelligence platform that helps financiers understand what the market opportunity is. So almost create discoverability or a database of enterprises to help streamline capital flows into different types of opportunities, because that's a big gap in terms of the availability of knowledge and discoverability of enterprises. And finally, ADB could play a role in terms of advocacy of common standards when it comes to WASH enterprises, specifically that are working with cities or utilities, so that it's easier for financiers to identify WASH enterprises that have lower risk potential. So these were the prioritized instruments, and finally, to wrap this up, when we looked at these three interventions, it's very clear based on our assessment of the market that even when you look at financial instruments such as a risk and cost reduction facility or an accelerator, the layer of technical assistance and market building initiatives is extremely important, and it needs to sort of fit in with both of these interventions for them to be successful. There are lots of examples in India of similar risk reduction facilities which have had a low uptake because of the limited technical assistance and market building facilities that they have along with that. With that, I think we'll wrap up the presentation, I think just in time, and I'll hand it back to Alison.
Thank you very much, Neerat, Harshita, and Kunal for a very comprehensive presentation. And I think the key takeaway is around having a package or a mix of financing instruments. And I think I read a blog yesterday that was saying blended finance is like a symphony, or orchestra. You need a variety of instruments to make it work. And I think you've demonstrated that point through your presentation. So I want to open the floor for questions. We have a number of participants, which is great to see. We have people from ADB's Office of Public-Private Partnerships, Private Sector Development Department and regional departments, but we also have people from ODV, from water.org, from 1001 Fontaine that are working on innovative financing. Many focused in the Philippines for some, so it'd be interesting to hear, if there's similar challenges faced in the Philippines as well to speak of. And then also we have representatives from financial institutions and others. So maybe just as a housekeeping note, we have disabled cameras and mics, but if anyone would like to ask a question through putting their questions in the chat box or raising your hand, we can open your mic and your camera to ask that question. So please feel free to raise your questions. Maybe just to get started, I had a question, and I think Kunal, you touched on a little bit in terms of lessons from other sectors. Although WASH is obviously complex and unique sectors, are there things that have worked in terms of financing instruments in other sectors that the WASH sector could learn from?
Yeah, absolutely. I think this is something that we also looked at when we were developing the recommendations for ADB. So the way we looked at this is that how there are other sectors in India that have gone through a similar journey. Neeraj touched upon this when he was giving the introduction that 5 or 10 years back we had a lot of SMEs that were probably not as developed, and now the business models are getting a bit clearer. And so there are other sectors that have gone through this journey, and when we look at the sectors in terms of where WASH can learn from, it comes down to the kinds of instruments that have helped enable private sector lending in those types of sectors. So education is one, where the role of private sector has become quite prominent in the last 10 to 15 years in India. But before that, a number of instruments such as grants and finance, other sort of concessional finance instruments played a huge role in getting private sector players to start participating in with low income communities. So we looked at those sectors and really tried to understand the types of instruments that had played a role in catalyzing private sector into these sectors to be able to come up with these kinds of recommendations by understanding where those sectors were about 5 or 10 years ago compared to where WASH is right now.
Yeah,
Great.
I think maybe just one example to add, Alison. I think one of the most scaled examples and most comparable examples I found very exciting while doing the research on this one was a facility called Asali Africa. It was for agri-SMEs, a very scaled facility, brought a bunch of partners together. A very similar problem statement, risk return very off, lots of financiers didn't want to fund agri-SMEs. So they combined guarantees and reward mechanisms very, very effectively, kept learning, kept iterating on the structure. And over time, I think were very, very successful. So it's seen a lot of really good uptake. And I think they've made the work public. So it's been really good learning for the sector, for multiple sectors overall.
And sorry, Alison, if I can just add to that, we actually tried to analyze the WASH space, and if you look at the slide which has those 6 dimensions, right, which sort of because the WASH space itself is very heterogeneous. In fact, so what is the investability of subsectors within WASH, right, and what kind of patterns could we learn from other sectors? So actually, if you think about this, the intra-WASH sector heterogeneity is sometimes more than the inter-sector homogeneity, right? So it might be that a certain set of business models in WASH are more similar from an investment perspective, let's say to some business models in education, and they might be very different from other WASH models, right? So I think this kind of a first principles approach that we've taken to analyzing investability is really useful and potentially could be scaled up by users to analyze their own markets and their own kind of segments where they're operating or trying to invest in.
Great, thanks. And thanks for raising that point about, just the diversity in the WASH sector. I think what struck me was in doing this study, just how sort of segmented the market was in terms of how different each of the types of players are in this sector. Thanks for that. I see Nita has her hand raised. Go ahead, Nita.
Thank you. It's more to thank Dalberg team all for making time, and I also see other partners, water.org, OAV, even PICTET, and others. So I know, Kunal, you emphasized to say they are de-risking facilities, they are other guarantee mechanisms. A lot of us, not just multi-development banks, but governments, we all think we need to mobilize private financing. Everybody, this is the only thing. You go to conferences, water conferences of any type, and you'll hear everybody from all corners saying this. So I don't know where. I mean, you said, okay, the technical assistance and market building still needs more attention than you see, and that is good for us to hear, because that's where we can provide more force. But I'm still grappling to find, when so many of us are at it in trying to unshackle this, where are we putting our eggs? Which basket? Why is it not lubricating the appetite? I just find it that the TA, how far do we go? I mean, you could provide $20 million technical assistance sitting somewhere. Which bucket would it sit? And so, just share some of your thoughts. And I also invite other colleagues from water.org and from PICTET and others who are joining to share their learning, because 2030 is down the road. We are so far behind. We are not meeting our SDG targets. We will not meet it if we don't really unshackle, redo, pull out the baby and the basket and the bucket that we've got and bring new baby and new basket and new bucket. So where are we going wrong? I still find it, it hasn't sort of unraveled that for me. So yeah, help me out, and let's hear from partners too. Thanks again.
Yeah, maybe I can just try and answer that question. Thanks for bringing that up, Nita. And I don't think we have a very clear answer to that because it's a fairly complex problem. But what we've at least seen is that you're right that there are lots of different types of initiatives that are ongoing right now, both in terms of technical assistance, like folks like Water.org that are present on the call, but a number of different types of instruments, facilities that have been launched recently, not in the last 5 years. I think a few of the things that are probably not happening that ADB can help play a role is that, number one, there is a lack of coordination between different actors. There are entities that are working directly with financial institutions on say, guarantee facilities. There are entities that are working with financial institutions to provide technical assistance. And there are some discussions around accelerators and impact bonds. But in terms of like sharing learnings and the ability to coordinate and partner with each other, there is a lack. There are limited mechanisms for sort of players to do that. And the second large thing, I think, which Neerath touched upon earlier, is that when it comes to financial institutions, there is really a gap in terms of the understanding of the WASH SME landscape. WASH SMEs is being seen as a segment, which really is not the right way of looking at it. There are different types of sub-segments within WASH SMEs. And so there is a need when you said technical assistance, where should technical assistance be focused on? One of the major things would be to help them understand different sub-segments within WASH SMEs and to really break that down into what are those 3 or 4 sub-segments that are actually ready for financing right now. And once you have more experience and more results that you can show within those segments through different types of instruments, then you can catalyze others to sort of come and participate. But that lack of understanding around business models, the segmentation, and the knowledge of which types of instruments would be relevant for which segments is one of the key ones. Of course, there are others as well, but this is something that we heard quite a lot of.
Yeah. And just to build on that, Nita, I fully agree with you. I think we're far behind where we need to be. I think the velocity of transactions is very, very low right now. And if this velocity of transactions continues, there's just no way that the targets will get met, right? So the way I think about this is really using some analogies from the fintech space, right? So if you look at they have this this framework that gets used in financial services called basically looking at the value and the frequency of transactions, right? So you have high value, low frequency transactions, you have low value, high frequency transactions. So if you look at what's really happening right now in transactions in the WASH space, so there are really high value, low frequency transactions that exist, right? So these are like really large city level $100 million deals, and you have low value, high frequency, right? Mostly MFI for B2C, that's happening. But what the future I think will need is a lot of mid-value, mid-frequency transactions, right? And I think the whole ecosystem is completely not geared for it. What needs to happen is a lot of collaboration. There's a lot of collaboration frictions that exist between different kinds of investors and SMEs, and those need to be solved if the market is going to clear these medium frequency, medium value transactions. And if you look at the recommendations we are sort of coming up with, right, those 3 recommendations about de-risking, about the accelerator, about capacity building, these are all like parts of a puzzle. If it comes together, then that mid kind of value transaction equilibrium should clear, and hopefully the velocity will increase.
Thanks a lot. I see Sridhar's got a question. Sridhar, come in? I'm sure, yeah, Alison would. Sorry, I should go away, but thank you again, and hope we can continue the dialogue.
Thanks, Nita. And yes, I see Sridhar has posted a question in the chat box. Many municipal and a good number of state governments have strained financials and poor ability to pay. Therefore, high counterparty risk is a key reason, in his view, for the reluctance of private financing to flow into the sector. And many SMEs have large receivables from subnational governments. So the question is, what is Dalberg's suggested solution to address this financing constraint? So any thoughts from the Dalberg team? Thanks.
Yeah, so Sridhar, I think that point you raised is absolutely is super important. I think almost everyone recognizes that government account receivables are the big kind of bane of any SME's existence, right? Across different sectors. India has 8,000 cities and towns. Most of them are actually bankrupt, or the economics don't work. So this is a fundamental problem. If you look at, I mean, there's 2 or 3 different ways of addressing this kind of a problem, right? One, the quantum of money is really large, so it's not like somebody can backstop this, right? So, in absolute terms. Having said that, there's recognition of this problem in the government. In fact, Dalberg has been working with some government agencies in India to try and get SME payables accelerated. So the government recognizes that this is the key impediment, which is holding back SME progress. So I think some of it will just be a matter of time, and the rising tide will lift all boats, and the washboards will also rise with that tide. That's one. Second, I think there's room for some instruments which de-risk this, which sort of provide working capital finance for SMEs. So that will definitely play a large role. And again, there will need to be some collaboration, friction, etc., that we sort of solve for in that, where the cities, the states have MOUs with the folks who kind of de-risk it. And lastly, I think there's something about technology which can play a very important role. Right now, the reason why some of this gets delayed is just capability to process transactions or payments by the cities or ULBs, and then some of it is intentionality or not having budgets kind of there. But tech can actually solve for a lot of the non kind of intention related challenges and really shrink the payment life cycle. Kunal, anything you want to add? I know you've been working on SME payments quite a bit.
No, nothing major to add on that. I think one of the things where to touch upon the tech point, I think there are different types of mechanisms in which specifically fintech is being used to help assess the credit ratings or the risk profile of different SMEs. And although that's something that is probably a few years away in wash, but SMEs that have been working with governments traditionally will have transaction records that can potentially be used to understand their credit ratings, and that makes it easier for financiers to understand the risk profile. And similarly, there are mechanisms and government programs that allow for utilities also to be able to develop credit ratings, right? And for financiers, it's really important to understand who the end consumer is, what's the credit profile of the end consumers. So both these types of credit rating mechanisms can be used to potentially de-risk, but it is probably one of the largest challenges that financial institutions face.
Great. Thank you for that. And thank you for also raising the role of technology. I was actually going to ask, yeah, how this, the digital revolution in the water sector can change and enable better access to financing. And I think you've touched on that in terms of reducing search and information costs. I see a question from, we have a question from 1001 Fontaine about the role of SMEs, or particularly NGOs, who won't be will never be investment ready because they reach the most vulnerable with affordable services. And balancing OPEX is key to sustaining WASH services, but recovering CAPEX is not always possible. So the question is, how do you see the role of DFIs and government in financing these organizations and helping them scale to reach unserved populations? This question from Amadine.
Yeah, it's actually the $1 million question, right? So I think I can answer this at 2 different levels. One, I think on the revenue side, there's often we fall into a binary trap when we think about who should be paying for services, right? And that trap really is the end users pay the entire thing, or the government pays the entire thing, right? So that binary will need to be sort of broken. I think more and more revenue models which sort of combine some payments from users, some from the public exchequer, some even from philanthropy. That's number one. So you try and make it as viable as possible. In spite of that, there might be some viability gap on an OPEX basis, certainly a CAPEX basis. And there, I think the coordination friction and the collaboration that we're talking about between different investors will need to be solved for, and really blended kind of investments will need to be put in place. So one needs to attack this from both sides, the revenue side and the investment side. That's the macro answer.
Great, thank you. And I see Tony from OAV has also kind of spoken to this. Her comment is, yeah, our difficulty also is with the current status in accessing financing is that they're in the middle. They face the challenge of not being that big. They're already scaling up, and they have proof that their model's working in terms of providing water supply connections, small networks and household connections to underserved populations, and 22 cities in the Philippines, but they need support in terms of building relationships with more municipal and city governments, and also in accessing financing to support this model for scale up. So I think, yeah, there may be one of these cases if the sort of missing middle. There's, as Tony notes, there's financing for big ticket items for big water utilities, but it's more challenging for smaller players and which often serve the vulnerable that we want to reach as part of scaling up the SDGs. So I think that's also an important point. I'll just check and see if there's any more hands up or questions. We have a couple more minutes. Maybe using the time, I know this study focused, of course, on India, but are there any examples of countries who've cracked this nut to a certain extent, where have come up with innovative solutions to expand WASH? Good examples from elsewhere that you could speak to?
So there are some, maybe I can, there's a lot of, I would say, variety in the way in which different countries have approached this based on the role public money plays in that country, the role philanthropic money plays in that country, and how rich that country is, so hence end user money. So we did some work, comparative work, let's say for water services in countries like Cambodia, Bangladesh, India, some countries in Africa. I think it's hard to call out one example that is scalable across different contexts, but a lot of it is really about the thing that seems to work is to socialize the idea of collaborative finance, and helping sort of everyone figure out what their role in the financing puzzle can be. I think that to me is the most scalable approach. The specifics will vary country by country. For instance, Senegal's doing some really interesting work around FSM and how do you sort of build business models around that. How do you try and let's say how do you extract value through, let's say, battery, water, etc. But the single, I think the single most important principle here is making sure that there's collaboration on the investor side and everyone coming in with their bit.
Yeah, and just to add to that, I think a lot to learn from other sectors, like you said, Alison, earlier as well, at the level of what type of instruments have worked and how they've evolved over time. There are lots of examples of impact bonds. There are lots of examples of guarantees, accelerators, and different types of technical assistance instruments that have been used in other sectors, and we can learn a lot from there in terms of how they should be designed and piloted in WASH. But specifically, we didn't look at a benchmarking of India with other countries, but like Neeraj said, there are countries at very different levels, and so it will be important for ADB as well as you're looking to pilot these to look at what you can learn from other countries.
Great. Thanks a lot, the response. Okay, we have a few minutes left, and I would like to hand over or introduce and hand over my colleague Christian Walder, who's a water supply and sanitation sector specialist in ADB's Sustainable Development and Climate Change Department, and he'll be giving our closing remarks. So over to you, Christian.
Thank you so much, Alison, and thank you also to Neeraj, Harshita, and Kunal for sharing your insights, and colleagues on the call for joining today's session and engaged discussion. I think it has been a very rich presentation with lots of food for thought and further discussion. The opportunities for ADB interventions that you have raised, they're really interesting, and I hope that we can discuss further how we can put some of these interventions into practice. I actually would like to take up the picture that Alison mentioned on comparing blended finance with an orchestra. Nita also mentioned that there is a steady drumbeat that says we need more blended finance, we need more private sector participation in the wash sector. But that's obviously not enough to create a symphony. You also need violins, horns, woodwinds, and many other instruments. And you need a producer who makes sure that all musicians are booked and show up and have the same sheet of music in front of them. As Harshita and colleagues have mentioned, WASH is a very complex space. And in the different WASH enterprises or stakeholders along the water supply and sanitation service chain, they have different financing needs, from large ticket lending to MSME or household lending. And in blended finance terms, more private sector parties such as pension funds, insurance companies, VCs, and other investors need to come on stage to develop the market space. And a collaboration on the investor side is needed, as Neeraj has just mentioned. And as discussed, also MDBs have an important role to play in this orchestra. So they have a great convening power, and they can engage and build the capacity of financial intermediaries to lend to small enterprises in the wash sector. And MDBs can also consider how to use their balance sheets and available TA and grant resources in the most effective way in taking risk off the table for the other actors in blended finance to be crowded in. So I think that today's session was a great starting point for further discussion on this important topic in ADB, but also together with our clients and partners in our developing member countries. With this, I would like to close. Again, thank you to all speakers and participants for sharing your insights and for joining today's session. I wish you all a great day ahead, and thanks again for joining. Thank you.
Thanks very much, Christian. And thank you very much to our speakers, other speakers today, to Pam, to Kunal, Harshita, Neeraj, for a very interesting discussion on WASH financing. And I very much hope this scoping study is the first starting point to continuing work in this space. So with that, and thank you as well to our audience as well for joining both our internal and external partners. Thank you, everyone. Bye.
Thank you so much, everyone. Have a good day.
Thank you.